In this week's video, we're going to be talking about the difference between a fiscal year and calendar year and what considerations you might want to think about when you are choosing your business's fiscal year end date. Now let's get into it. Hi, welcome to my channel. My name is Irene and I'm a CPA here in Canada. I post videos explaining important accounting and tax concepts using simple language to help business owners gain financial clarity. Make sure you hit that like and subscribe button for more. Let's start by defining what a fiscal year is. A fiscal year is a period of 12 consecutive months that a corporation uses to report its financial results. So unlike the calendar year, which follows a January to December cycle, a fiscal year can start at any point during the year. So for example, let's say ABC company has a fiscal year end date of June 30th. That would mean that ABC company's fiscal year end starts on July 1st, goes for 12 months, and ends on June 30th of the next year. So if we're looking at ABC's fiscal 2025 year end, you are looking at July 1st, 2024, ending on June 30th, 2025. For sole proprietors, your business year will follow the calendar year. So your business year will be January 1 to December 31st. The fiscal year end date is an important element in the business because the date will determine when the corporation's corporate tax filings will be due, when the tax payment deadlines are, and other compliance matters. Generally speaking, for Canadian-controlled private corporations, CCPCs, the corporate taxes are typically due 3 months after the fiscal year-end date. In some instances, the corporate taxes might be due 2 months after the fiscal year-end date, depending on a few criterias. Nonetheless, the deadline to file your corporate tax return will be 6 months after the fiscal year-end date. So for the new business owners, if you recently incorporated your business and you haven't chose a fiscal year-end date, that is no problem. When you go to file your first ever corporate tax return, that is when you're going to select your fiscal year-end date. You can choose any date to be your fiscal year-end date as long as it is within 372 days from the initial date that you've incorporated the business. Now, going back to that example of ABC Company, let's say ABC Company was incorporated on June 27th, 2024, and they decided to choose for their fiscal year-end date to be June 30th. Of 2025, their first ever fiscal year end. This is possible because June 30th, 2025 is within 372 days of June 27th, 2024. So as mentioned earlier, corporate taxes are due 6 months after the fiscal year end date. So for ABC Company, who has a year end of June 30th, 2025, the corporate tax filing is going to be due December 30th, 2025. However, assuming that ABC Company's corporate taxes are due 3 months after the fiscal year end, their first tax payment will be due on September 30th, 2025 for their June 30th, 2025 fiscal year end. Here are some items to consider when you're choosing a fiscal year end date for your corporation. First consideration is tax planning. This topic can be very complicated, so I'll quickly go over it at a high level. So although your corporation reports the financial results based on the fiscal year, the salaries paid to employees and dividends paid to shareholders actually will follow a calendar year from January to December. By choosing a fiscal year end that is not the same as a calendar year end, you are provided with a bit more flexibility when it comes to planning dividends and salary/bonuses. This is not financial advice, and I highly consult you to speak with a CPA for this matter. The second consideration is other companies. If you have other active companies or other holding companies, you may want to select a fiscal year end date for your new corporation that aligns with the rest of your portfolio of companies. This way, when all the year ends match, it will make it a lot easier for you to keep track of all of your corporate affairs and the various deadlines, payments, etc. Another consideration is cash flows. Keeping in mind when the corporation's tax payments will be due, it's really important to be aware of the timing of these payments relative to the rest of your business cycle and other aspects of your life, including your personal life. So for example, let's say your corporation's tax payment deadline is January 31st. And as we know, in December, it's the holidays and there's a lot of holiday spending. So now in January, you have this massive bill for your holiday spendings as well as your corporate taxes coming due. That's why it's really important to also keep that in mind for cash flow purposes. Please know that this issue can be mitigated with tax installments being paid beforehand throughout the year. Once you set the year-end date, the date is not going to change year over year. Although you can change the date after the fact, there is a process that will likely require you to have additional tax filings. And therefore, the fiscal year-end date typically does not change year over year. Generally speaking, choosing a December 31st year-end may cause some delays with your CPA. The reason for that is because when you choose a December 31st year-end, the months following that date, January to April, is when your CPA is going to be the most busiest and most preoccupied by other tax filings like personal income tax filings, trust filings, non-resident tax slips, T4 and T5 tax slips, etc. The purpose of today's video was really just to give you a general understanding of the difference between a fiscal year and calendar year. And I noticed that sometimes, especially new entrepreneurs, they get a little bit confused by these two concepts. I highly suggest you to consult a CPA to determine what date you guys should be using for your fiscal year end for your specific situation. Thank you so much for watching until the end of the video. I hope the video was helpful. Make sure you guys hit the like and subscribe button for more and leave me any comments if you have any questions. Over here, YouTube thinks that you're really going to like this video, so I'll meet you there.